following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's making a great night and a great week, folks. Cultivate wisdom. You don't need to accumulate knowledge to become wise. Anyone can become wise. When you become wise, you respect your body, you respect your mind, and you respect your soul. When you become wise, your life is controlled by your heart, not your head. Market wise, let's take a look at it out here. We have the Dow Industrials up 123, NASDAQ flat, S&P's up 8. And for the NASDAQ being flat, it's pretty good, folks, because the NASDAQ was down big this morning. Gold contract up $7.40, trading at $12.29 an ounce. Silver up 8 cents, $14.72 an ounce. Light sweet crude up 28 cents, $71.61 a barrel. Notes and bonds, you get the 10-year note down 5 ticks, 118.05. 30-year bond down 14 ticks, 139.09. King dollar down 136 ticks, trading 94.775. The euro is trading at 115.78 to 1 US dollar. The yen is out here at 111.89 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. I know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so S&P SPY last week, we go from a price point of $293.21. We get down to $270. Big move, 23 bucks on the way down. We bring this back and we take a look at this, and what's sticking out like a sore thumb, folks, is your high volume swing low out here. We dug into it. Bottom line, the bottom of that is 252. So you kind of expect to get down there on one get-go. There's no two ways about that. Bottom line, what it looks like we're going to have here, you got a nice counter-trend bounce that's in the making here. Bottom line, we'll see if it can get up by the 285. We take a look at this, and let's just see if we do it this way. If I go, whoops. Okay, so let's do this. Just see from the top to the bottom. Okay, so you get, yeah, 282 is game. Well, 282 is a 50% retracement, but, you know, the way that this is set up, I suspect you probably can get to 286. And 286 is actually more than a 0.618 retracement, but we'll see how it handles the 282 area first. But so what I expect we're doing here, and today basically is the beginning of it. You know, you're bouncing with tremendous lighter volume. If we continue higher with lighter volume, there's the first characteristics of the B to C of an ABC structure on the way down. Because what we haven't done inside the SPY is hit into that high volume low. The Qs, the NDX 100, same type of setup. Qs up on 53 million today. Bottom line is that they also came off the highs, monster volume. They got support right at the high of the high volume low that's laying out there, and that baby's laying out there at 150, so it's a big number. The small caps were the first to turn around. They were the largest get-go on the way down. Bottom line, inside the small caps, what you have, the high of that was 153, the low was 142, and we got to 151. I expect you're going to see these small caps trying to get into the 160 area. Right now, you're at 154. Silver, let's go take a look at the silver market. So silver last week, folks, what you had is this. Gold had wide price spread, had the volume behind the move, all of it. Silver basically was lagging. Silver right now, you had a high out here today of $14.80. We did 60,000 contracts. Silver still needs more contract volume. That's the real bottom line. We need more price spread and contract volume inside the silver market. Gold is basically cranking it out. We take a look at gold. Gold right now is up 0.6%. We got to 12.36 out here today. It has volume behind the move. Bottom line, gold looks to me like we're going to make the run for 13.37, and right now you're at 12.29. We go take a look at a few of these equities. So the benchmark inside this gold market, folks, is April as well as July. Those are the highs that the XAU, the HUI are going for. And what's intriguing here is that Harmony is already basically taken those out. It's taken out. It's taken out the May high. This is pretty cool. Yeah, and you're going for the. So we just took out the May swing high at 210, and it has the volume behind the move. Now your next level is up there going after March 26th, 253. The thing that's intriguing about Harmony is that when we had the last large run we had in gold, folks, was 2016. It was the end of 2015 to 2016. Harmony was the first one to take off, too. It had rejected lower price first and took off first, and that's exactly what happened in this one, which is pretty wild. That's on the last get-go, Harmony went from 54 cents the last first week of December up until in August it was at 487. So that was quite a run, and the rest of those ran at the same time. Now, King Dollar. What do we got with King Dollar? Well, King Dollar right now, bottom line, is going after its strength from the 14th of June. And we'll see where we get volume. Each time the King Dollars come down here, it hasn't had the volume to basically even get into this number. The number we're talking about is approximately 94 in the index, in the dollar index. And you're going to need big volume to break that down. The reason being is that was a monster day in the dollar. We went from 92,500 up to 93,995. So big numbers out there all across the board. Now, as you come over to our website, at TFNN, bottom line, if you have an interest, I'm going to be doing a workshop on gold. It's coming this Thursday night. And the way that you can get into that workshop, you go to TFNN, just go down to the gold report, you subscribe to the gold report. What I'm going to be talking about is going to be kind of cool, folks. So what we're going to do is that I'm going to go back to the beginning of the gold bull, right, 2001. And we're going to talk about the aspect of where we were, where we came from, where we're going. And then inside of the workshop, it's going to be a 60-minute workshop. We're going to be talking about what moves physical metal market, what moves the ETF structures, how the yen, the dollar can move gold, and what gold and silver equities you want to keep your eye on that I think are going to be going higher in this environment. All the subscriptions, folks, come on a 30-day money-back guarantee. Check it out right on the front page of TFN. Stay right there, folks. I'm coming right back with my man, Mr. Steve Rhodes.
Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now up 24. You get the NASDAQ down 32. S&Ps are off 3. If we do take a look at the Dow Industrials, I mean, this thing has been moving around pretty good. You know, when you take a look at just point-wise here. So we had a high of today of 25,482. The low of 25,250. So you can see you're talking about 230-point movement from highs to lows. Right before I got in the air, that's where the thing just popped from 302 all the way up to 482. So if we go inside the Dow Industrials, take a look at what is moving them up and down, is that you have Goldman Sachs is putting 16 positive points. Disney's putting 10. Walgreens are putting 10. Taken away from it, Apple. Apple's the culprit out here today. And because it's such a large capital weighting structure, it can move things around pretty quickly as a $218 stock. That's putting negative 23 points into it. Visa's putting 13. Microsoft is putting 8. Cisco is putting 5. If we go and we take a look at Apple intraday, just to see how this shakes out, you're going to see that bottom line, when Apple goes from 217 up to 219, guess what? The Dow can go up $100 in a second. You go from 219 back to 218.5, and guess what? You give up 40 points. So you can expect more of that as we come into the close. And you know the way this is working out. Let me go put the E-minis up, because if you take a look at this, what you're going to see is that I'll get this into one day, so you can see the testing. What we have here inside the E-minis, folks, again, this is really kind of cool. It's real cool, actually. It's a classic. And what I mean by a classic, technically it's a classic. Intraday, right now we have 4 higher lows and 3 higher highs. This market wants to bounce, you know, no matter where we end up today. This is pretty cool. Now, what's also happening here, and this is where, you know, it looks to me like if we put this S&P up, it looks to me like this thing is really going to get a good bounce going, which would make sense. And the reason I'm saying that is that when you start testing like we have today, that's not, it'll end up looking like a V coming out of the bottom, but this isn't really a V because of the way that this is tested out here today. It's pretty cool. Now, that being said, if you're going to get this bounce, you are not going to see a lower low out here today. If we get that, then guess what? Then this market is going to be in deeper trouble than I think tomorrow. But right now, I would say that what we're going to see here is that you're going to actually see the markets try to get into the green, and they'll all be in the green when we finish the day out here. And that'll give folks a little more confidence maybe in buying tomorrow. But my take is this is a dead cat bounce. We're doing a B to a C of an ABC structure on the way down. Let's go take a look at a couple of the big dogs out here. Amazon right now, that's down $19, but that's trying to slice out a bottom here. We're down from a price point of $2,050. On Thursday, we hit $16.85. And if we bring this back, yeah, this is tough, man. Amazon get a long way down. This thing ain't even close to being done. You know, because when you look at Amazon, it looks to me, now this is going to be monster volume off the high. Amazon looks to be game 1638. Yeah, 1638. That's $50 lower than we were last Thursday. Now, the financials coming out and have been coming out with numbers. The financials are in trouble, folks. So it's going to get interesting here as to see, you know, just where these interest rates are going to go. Because when we take a look at, like Bank of America, we pull Bank of America up. What you're going to see, Bank of America is laying, you know, bottom line, below its February 5th high volume high. And we came down last week with volume. We take a look at the XLF in general, and that also is laying, let's see where the context is. Yeah, below it. The high volume low is $26.76. We're $26.49. That's a breakdown. Now, it's going to take more to break down the strength inside the XLF that was out there on the week of December 1st. December 1st is when the XLF went from 26.18 to 27.88. That put it in a new range, but guess what? The way this is coming lower with volume is saying that it wants to break down. And if that's what we get, let's go over to the bonds and notes. Bottom line is that what's laying out here is that this could be more than a dead cat bounce inside the note and bond market. You know, the 10-year note had come down straight down from August at 120.20. We hit a low last week of 117. The interest rate on the 10-year, the yield, last week was 3.23. Yeah, 3.15 right now. And if, in fact, this is going to come back from the dead, what you're going to see is that we got a monster sign of strength coming into the downdraft. That sign of strength, last Thursday, we did 3.6 million contracts, and you were going into the downdraft with 2.6. That's very unusual. That your first get-go up, you have 100 or a million more contracts than you came down on. That's also saying, number one, you go to the top of that bar, which is 118.28. If we get one more sign of strength, like we did last Thursday, or Wednesday or Thursday, bottom line is that that's going to say that the 10-year is going to go right back to 120.20. Because what we have here is that you're right at the verge of basically breaking the trend line, meaning breaking the downdraft. So it's pretty wild. If we go over to the TLT, we take a look at the TLT, you'll see the TLT, this is the 20-year bond fund ETF. That went from $122, laid out here at 112. You pull this back on a longer basis, and you're going to see, you know, inside 116.80. Bottom line, you're back in a lot. Well, you can make a point that you're not in the lower range yet. But bottom line, you get back inside 116.80, you're definitely in a higher range, and then it gives it a shot that hey, it can go up and test this high that was generated out here in 2016. You know, it's the note and bond market, folks, is pretty amazing. Now, the thing that really is amazing is this, because fundamentally, it doesn't seem that that can happen. And one of the main reasons is that we're going to see the amount of bonds and notes pushed out in the marketplace in a huge way because the Treasury just came out with the deficit numbers, and they're monsters. So the deficit, folks, the budget deficit grew to $779 billion. Big number, a huge number. 17% wider than last year. You know, that's going to be all the tax cuts, of course. We paid $523 billion in interest last year, and next year we're going to pay more. So, if in fact this note and bond market wants to get to higher price, it's going to be pretty wild watching this whole thing shake out, because that would be saying that the broad market would be continuing lower, because that's a huge amount of money that would just say that I want my money back. I'm not worried about making money on my money. I want to make sure I get it back. Dow Industrials right now up 51, Nasdaq's down 23, S&P's are flat. We'll come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go take a look at this S&P, because one of the Tigers, Manzi, he's got a great question, and, you know, he's being facetious at the same time. What he's saying specifically is that, hey, listen, the S&P has been rallying for 6 months. Why would you think that you can get a bounce after 6 days down? So that's a great point, and I suspect where my head is this, is that you have a fast move down, you have huge energy that is expended, but more so what you had here, folks, on the first couple days, there was, we know that the first day down, they put an additional $200 billion into the S&P. So I suspect that that's where the whole buying was done, and more than likely that buying got toasted. So, you know, a dead cat bounce, not the end of the world. What is going to get intriguing out here is that the Saudis just came across, folks. The Saudis are going to throw their own folks under the table here. They just came across and they just said that the reporter that they are claiming now that there was an interrogation that was intended to lead to his abduction from Turkey. Bottom line is that, and it got, he died from a botched interrogation. And then on top of that, though, we were talking about this morning, on top of that, they are, let's see, yeah, there is. Okay, one source said the report will likely conclude that the operation was carried out without clearance, of course it was, and transparency, and that those involved would be responsible. They sent them, they killed them, now they're going to probably kill the people that killed them. I'm telling you, man, it's pretty sick. 877-927-6648. Let's get over and take a look at that euro, folks. So, the euro out here, bottom line, we're at 115.78, and that baby right there, that is still building costs to try to get up into this 118. We've been basing out here for a long period of time. We'll see if we can get any traction. As the dollar keeps moving into the lower price of 94, volume dries up dramatically. Now, I don't have the volume on the euro as it gets to the 117.5, but I expect that's the exact same type of setup that we do have as that gets up into that higher level. We're going to take a look at the, let's see, you got Bank of America, Berkshire Hathaway. So BRK, Berkshire is still the largest weighting structure inside the XLF. Berkshire came off the high of 224. 2 days later, it's at 203. What stopped it on its tracks is when it went topside in July. That's, and if we take this back, yeah, this baby, and what Berkshire had already done, Berkshire had already tested its high volume low of February, but this is what it looks like. You know, Bank of America already came back to the high volume low. The XLF did. Both of those are underneath it. If the rest of these bank stocks come back into this area and then reject it, they rejected it last time. Berkshire rejected that on the 29th of June. We did 24 million versus 44. Then we got to the highs and it couldn't handle price. That'd be telling me that this is going to be, we're going to be in this high volume consolidation once we get down to that level inside the S&P. And this would be a monster consolidation. It would also be, if this happens before the end of this year, what it would do is it basically get the S&P for a loss for the year, because the number that we're talking about out here, that's where the S&P was trading on November 1st. And it looks to me like that's going to be the range. Now, that's going to be a dynamite range for trading, because you're talking about a monster range. You're talking about the top of that range, 29.40, the bottom of that range, 25. You get a 400-point range, and that's definitely doable inside these indices because of the fact that when we went up so dramatically, it needs a break. You know, if I just put the Dow Industrials up this, and I'll put this on a monthly so you can see it. I'll put a 5-year monthly. And you're going to see it was a one-way. Oh, actually, let me do the 10-year, because this is pretty cool. You're going to see. Yeah, okay, so check this out, folks. This is pretty cool. So if we go back to 2011. 2011, Dow Industrials at 10,400. You make a run straight up to 18,000. So 8,000 points, right? Then what do? We trade sideways from November of 2014 until November of 2016. 2 years. That's where I think we are here. And then we had a big expansion again. We go from 15,000. You run up to 26,000. Bottom line, let me look at something here. So that was 18,300. Yeah, so check this out. the consolidation that was in place from 2014 to 2016 was 3,000 Dow points. This one would be 4. That makes sense. You're up higher, and we've been. If that's the case, that would say that by the end of the year, that'll be a 1-year consolidation at the highs. And you can see that we did a 2-year consolidation before we went to higher price. And we'll find out when we get down to that bottom. What will end up happening is that the financials will probably give us one of the biggest clues where this wants to go, because the financials are already there. If the financials actually break down under that and get volume, then you're talking a whole different ball game out here. Yeah, you'd definitely be talking a whole new ball game. Netflix. Netflix is going to be kicking off the tech stocks out here tomorrow after the close, coming out with their numbers. Netflix is trading at $334, and when we take a look at highs to lows out here, you know, the high in Netflix is $423, $90 higher. That was generated June of this year. June of this year. The low out here is $310, so that's quite a range. You get a $110 range that Netflix is trading in. And that Netflix, no doubt, that will start moving a lot of the tech stocks around. Google's coming out with their numbers on the 25th of this month. You got Microsoft. Man, these numbers are going to be coming fast and furious. The 24th, we have Facebook. The 30th, you got, where's the big boy, Amazon? The 25th. Amazon's on the 25th. So there's going to be quite a few, every day right now coming into this market, we're going to have lots of numbers. XAU and the HUI, these babies want higher price. They got volume behind the move. They took out their swing points, took them out with volume. You get the XAU trading 70. That wants to go to 84. These I suspect we're going to get big movements here. Gold Bugs Index right now is trading at 156, and I'm looking at 182. And the main reason, folks, is that we came down so hard and fast from April and May that there's not much in the way going topside out here. Dow Industrials right now up 2. NASDAQ is down 38. S&Ps are off 5. We have the gold contract up 680. Silver's up 7 cents. Notes and bonds down 4 ticks. The 10-year, 12 ticks for the bond. Come right back, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now up 14. You get the NASDAQ down 31. S&Ps are off 3. Let's go to the composite and take a look at the composite. So the composite out here, folks, today got into a low of 7,400. Up 64 bucks from there. Volume-wise, I suspect in all of these indices, you're going to drop in with light volume. That's how it normally works. We're at 1.7 billion right now. I suspect you're going to do about 2.2. If we take a look at the 3 Qs, what you have with the 3 Qs out here, 57 million shares. You know, you're into this 114 million. And the thing that is actually pretty amazing too is that when you take a look at the last 7 trading days, inside the Qs, that took you back to the beginning of May. Small cap, different ball game, man. The small caps, we basically got back to December of this year. Now, it's going to take quite a bit. We'll start with the small caps here. If you look at the small caps, what you're also going to see is this. We can go back 3 years. And this is the first time that we had a decisive break in all the averages in over 3 years. Last time that this happened was January of 2016. Bottom line, they stayed under those averages for approximately a month, 2 months. So we'll see where this shakes out even on these counter trend bounce, because you got to remember something, folks that use these averages, that's going to make a difference as they are approaching on a dead cat bounce, as they're approaching to try to get over these averages. Now, when we take a look at the small caps, this is a real classic because it looks to me, if this flattens out a little, I can see it, you know, just looking at it in general. If you bounce up to ice, which the markets love to do, that's going to be right at it, which is 162.16 right now. So, you know, it'll change. These will change every day, but that's a big heads up in general. The SPY, I believe, saved itself. I think it just saved itself. No, it didn't. Okay, so it's interesting. You know, the SPY is trying to get above it. I'd like to actually see it get above it right now. The reason being is that if you get above it right now, that's not a move with conviction. You know, we're going sideways. You have 79 million shares traded. That's nothing compared to 274 and 214 on the way down. You know, you can see that bottom line where that is at, meaning the energy is very weak going topside, which totally makes sense, by the way. The Qs, they held. That is a big number. The Qs, you know, broke it last Thursday, got above it on Friday, tested it today. That's saying the Qs want to bounce, and I suspect the Qs want to bounce to 178, and right now you're at 172, and we are starting earnings season, so that's where you can get nice fast moves after the market closes. See if they can take anything right into the market itself. Let's go take a look at a couple of the FedEx and UPS. you know, we're coming into the holiday season. You're going to start hearing about retail sales in a big way really soon. Look at FedEx. Amazing, man. So FedEx came right down to the high volume low. Right now, 226.20. We're going to learn a lot from FedEx, too. This is pretty amazing, actually. So FedEx, folks, let me see if UPS looks the same. FedEx looks like it's going to break down. Yeah, this is building cause for lower price, man. And that's good. FedEx is trading where it was trading in September of last year. UPS, let's see how UPS is set up. UPS is trading 116.04. Oh, this is a big consolidation. Okay. UPS is not in that bad a shape compared to FedEx. That's interesting. Let me get this closer. Yeah, it's not. UPS looks like it's got a better move than FedEx. The cannabis stocks. Okay, so look at this. Canopy Growth is going topside with volume. It's going to be so. Canopy Growth has a high volume high. That high volume high is $56.59. You want to see how these things work, man? There it is. 56. We've hit 56.67. This just happened. Let me look at this for a second. Okay, no, it's just going. So, recreational cannabis. This just blew it away. This is pretty cool. Recreational cannabis goes on sale the Wednesday up in Canada, and there's going to be winners and losers, folks. This is a stock I always liked anyway. But bottom line is that it's taken out the swing high of 37.70. That was a high volume swing high. You get volume in it today in a big way, and listen to this number. This is a monster number. So. October 17th, it gets legal. Let's see. So this is, let me read this article for a second. Okay, listen to this number, folks. There's 135 publicly traded pot companies in Canada. 135. Big number. The larger players are figuring that there's only going to be a half dozen major players left in 3 years after legalization. I'm not quite sure about that. I think there's going to be more than that. Bruce Linton, who is the CEO of Canopy Growth, he is saying, and on his website, looking at this, it's all about the aspect of what is your cost of growing cannabis, and he's saying that you got to keep the cost at $1. That's what they're looking at. Low production costs is another essential ingredient to success. It's a non-starter if they're not growing cannabis at less than $1 a gram. Few producers meet that price point, though many say their costs will fall as production ramps up. I'm not quite sure of that. But what's blowing my mind is that when you start doing the numbers, you know, about the amount of people in Canada versus the amount of pot that they can grow themselves versus what, you know, what can be done. So Tilray. So look at this. This is the bizarre one. Tilray has a market cap of $13.6 billion. Their cost is $3.33 per gram. Yeah, that's a big number. That was the last, the June 30th number. And Canopy's growing at less than $1. If you go on their website, they kind of break it down for you. Let me pull this up. So Tilray, where's Tilray? I'm wondering if they're all moving out here. So Tilray, oh yeah, they're all moving. Oh my God, Tilray's up $18. What a trip, man! Unreal. Yeah, and they're all actually accelerating coming into the closeout here. Let's see what we got. Yeah, big numbers, big numbers. So you get Canopy. The thing that's a mind blower is that Canopy, well, maybe this will make it up for today. We'll see. Okay, stay right there, folks. As soon as you come back, I'll get you the market cap on Canopy growth. Right now, you have the Dow Industrials up 2, NASDAQ is down 41, S&P's off 5.5. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow Industrials down 27. NASDAQ is off 53. S&Ps are down 8.5. Percentage-wise out here, you have the Dow basically flat. NASDAQ is down 0.7%. S&Ps are off 0.2. If we do go over and take a look at the composite first, what you have with the composite, bottom line, you get a sideways move out here. Yeah, it's definitely a sideways move. You know, the high of out here today was 70. Oh, this is pretty cool. The high was 7,500 and the low was 7,400. That is pretty unusual. It did have a decimal after it. The high 7,500, 0.928, and on the low it was 0.068. But that's pretty cool, just in general, how that baby did shake out. Bank of America, that came out with numbers. Bottom line, that stock didn't hold out here today. You have, let's say, Cisco's down 91 cents. Oh, NVIDIA. What's happening with poor NVIDIA? Let's go take a look at NVIDIA. NVIDIA is not holding price. That is down $10.67. That was a one-way move down for NVIDIA. This is, okay, so let's bring this back. This is what is haunting also the chip makers. Well, if you own NVIDIA, folks, just get out of the way, because it looks to me like NVIDIA wants to run down to 168. And, you know, at 168, here, you want to see something that's really wild. That sounds like a monster, right, move, but guess what? Because this went up so high, 168 is actually not even a 50% retracement of the whole move. 187 is a 0.382 retracement. And between a 0.382 or 50, that's a normal move in a bull market that still wants to go higher. That's how bizarre that is. That is pretty intense. SMHs, let's go over to the SMHs, see what the SMHs are doing. Yeah, same setup. They can't hold a bid either. So the chips in general have some problems. The SMHs, 93.88. Look at that, it missed it. That's still going after its high volume low. The high volume low, February, is 93.88. We got down to 94.67 last week. Wants to hit it. Stay right there, folks. Going to be coming back with some numbers after the close. Dow Industrials down 40, NASDAQ off 52, S&P's down 10. Come right back.
Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Path's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
This is TFNN, the Tiger Financial News Network. TFNN Headline News Update. Here's Tom O'Brien.
Welcome, folks, and as they say, it was not a pretty close, no doubt. You have the Dow Industrials down 95. If we take a look at the highs to the lows in the Dow Industrials out here today, pretty amazing, folks. You had the high out here of 25,482. low out there of 25,243. So you can see a 250-point movement. Big numbers on that movement, no doubt. We're going to take a look at the S&P. S&P came down 15 points, 27.53. You had the NASDAQ down 66. Now, if we get over to the S&P, though, and take a look at this. This is, if you're a bull, bottom line, I think we're in ABC structure on the way down. But if you're a bull, basically, this is what you probably want to see. The reason being is this. If we had stayed higher with light volume, bottom line, you're setting up an ABC down. It still can. But as this is pushing with lower volume, that's like saying, okay, man, the volume is too light to basically stay at a lower price. You're talking about 93 million going into 183 million, as well as 274 million. So we get a volatile market. That's the real bottom line out here. Gold contract. Gold contract was up $6.70, trading at $12.28. You had silver up 7 cents, $14.70 an ounce. Light sweet crude up 27 cents, $71.61 a barrel. Notes and bonds, 10-year note down 3 ticks, trading at a price point of 118.07. 30-year bond down 11, 138.12. King dollar down 151.6, 94.790, 760 rather. The euro is at 115.80. The yen is trading at 111.79. We get over and we take a look at the NASDAQ composite, because the composite was the king dog in the way down out here. You have Netflix kicking off the tech stocks tomorrow afternoon after the close. The composite was down 66 bucks. You take a look at this number, though, and the amount of energy the composite did, 2.1 billion. Well, you're going into 2.6 and 3.1. So it looks to me that you're still going to basically level out here. We'll see whether they get a dead cat bounce going, and that's what I'm looking for. I'm looking for a B to C of a much larger ABC structure on the way down. That'll take you down to that high volume swing low in the S&P from February. Dow Industrials closed down 89, NASDAQ down 66, S&P's off 30, off 16. Come right back. Stay right there, folks.
TFNN has put together the best lineup of live content for traders by traders every market day, featuring some of the most knowledgeable and respected minds in the business. TFNN broadcasts 5 days a week, live from 8:30 a.m. till 5 p.m. Eastern Time. Every morning at 8:30 a.m., Jason Paff starts things off with his program, The Morning Market Kickoff. At 9 a.m., Larry Pezzamento breaks down the market for the opening bell with Trade What You See. At 10 a.m., Tom and Tommy O'Brien host the Bull Bear Nadex Options Hour, followed at 11 a.m. by the team at TD Ameritrade and Thinkorswim with Fast Market. Basil Chapman hosts the Tiger Technicians Hour at noon, Steve Rhodes at 1 p.m. with the Trader's Edge, Dave White at 2 p.m. with the Power Trading Hour, and Tom O'Brien anchors the daily lineup from 3 till 5 as host of the Tom O'Brien Show. Tune in to TFNN's Tiger TV on your computer or mobile device, and you can always find us streaming on YouTube. TFNN.com, educating investors.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. 9190.
Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Path's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors.
The following is a presentation of TFNN. The Tom O'Brien is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Look at our man, Jim from Minneapolis. We're going to take him by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone's having a great day, safe day. Let's make it a great week, folks. Let's take a look at one of our 4 agreements. Always do your best. Surrender and let go of the past. Whatever life takes away from you, let it go. When you surrender and let go of the past, you allow yourself to be fully alive in the moment. Letting go of the past means that you can enjoy the dream that is happening right here, right now. Market-wise, let's take a look at it out here. We had the Dow Industrials down 89, NASDAQ off 66, S&P's down 17. Percentage-wise out here, folks, you had the S&P and Dow Industrials down 0.3%. NASDAQ Composite down 0.8%. Gold contract traded up $7.80 at $12.2980 an ounce. We had silver up 8 cents, $14.71 an ounce. We do want to see more traction inside the silver market. Gold has it going, has the wide price spread, has the volume behind the move. Bottom line, gold looks to me like there's April highs, a game. That's you're talking about the 13.27, 13.37 mark. Oil up 26 cents, $71.60 a barrel. Notes and bonds. You get the 10-year note, down 3 ticks, 118.07. 30-year bond down 9, trading at a price point of 138.14. And King Dollar down 161 ticks, 94.750. The euro is at 115.81 to $1 US. The yen is trading out here at a price point of 111.77 to $1 US. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so if we go over to the SPY, we're looking at the SPY. Couldn't hold price out here. Bottom line is that you're down 146. This baby still looks like a bottom line. It wants to bounce, folks, okay? You know, we get down to the price point of 270. Couldn't hold price out here today, but now what you have is this. You're pushing lower. Huge contraction on volume. So Thursday, you did 274 million on the way down. Yesterday, you did 183 million. Today, you did all of 97 million. That is a decent setup for some kind of a bounce inside the marketplace. Qs, same type of setup inside the Qs. Qs couldn't hold price. You're down $2.11, 63 million shares. Well, you're going against 143. as well as 102. The IWM. Now, the IWM, I suspect what we're going to have when all said and done, folks, is that we're actually going to do a B to a C of an ABC structure on the way down. That is going to go after this high volume low that has been laying out here since the February 9th, week of February 9th. The IWM, bottom line, goes up 57 cents. 32 million shares traded, really a sideways day inside the IWM. All those indices, though, I expect each one of them want to get some kind of a dead cat bounce going. We had a great question earlier in the program to one of our targets in the den, said, hey, man, you know, you've been up for 6 months. Why do you down for 6 days think you're going to be bounced? Which is a fact. There's no doubt about that. Bottom line, when you're doing expansion-contraction ratios inside the Fibonacci sequence, folks, they just like hitting them. That's what it comes down to. If the market goes down too fast, which it is what it is. We go down fast. That's how markets like to go down. Then you get fast counter-trend bounces. You know, who knows what's going to basically get that going out here. If we go into the oil market, we take a look at oil. What we have with oil out here, oil traded right now up 0.4%. Now, oil is looking like it's an ABC structure on the way down. You know, we did 546,000 contracts out here today. Bottom line, that's light contract volume as we were coming into 784,000 contracts. You know, big numbers. What the Saudi government did come out with just about 20 minutes ago, they're saying that, all in all, it was like this guy that, unfortunately, they boggled a interrogation. That's what they're claiming. And that's how the reporter died. Bottom line is that they're going to burn someone for it. And doesn't look, if anything, folks, it looks like the oil market is doing an ABC structure on the way down versus on the way up. Gold contract. What do we have inside the gold contract? Gold contract wants higher price. Gold cleared the consolidation that it's been in out here since the August 13th area. You had volume behind the move once again out here today, 281,000 contracts. We did 500,000 contracts last Thursday. This baby is set up, first off, to run up into the price point of 1304. Looks like to me we're going to run at 1377. 1377 is the high from where we came down from in April. I mean, down in April, it was a fast and furious move on the way down. What we haven't had yet is this. We have not had the dollar index fall apart. Each and every time that it gets down into its lower level, which is at now, bottom line, you have a big contraction of volume. And that's what we had out here today, 13,000 contracts. Bottom line, in order to crack the 94 level, we're going to need about 28 to 35, anything over 28,000 contracts. That's what we're going to need as we're going into that level. As you come over to our website, folks, at TFNN, I'm going to be doing a webinar this coming Thursday night. You know, bottom line is that this metals market, folks, has been in a downtrend for quite some time. Since last April, that thing basically was a one-way on the way down. That being said, guess what? We're not only off the bottom, we're off the bottom, and the week prior to last week, that's where we had some of the largest short positions in the market. It's all lined up that gold wants higher price. Has got higher price, come off the lows with strength. That being said, I'm going to be doing a workshop this coming Thursday night. For my subscribers to the Gold Report, you can be a subscriber right here, right now. Comes with a 30-day money-back guarantee. The way you do that, you come over to our website at TFNN, go into featured content. You're going to see the Gold Report right there. You hit that, you can subscribe either a month, 6 months, a year, all come with a 30-day money-back guarantee. What I'm going to be doing, I'm going to be going right back to the beginning of the gold market run, meaning 2001. I'm going to start there. The title is The Gold Market from the Beginning of the Bull to in 2001 to now. I'm going to be talking about what you want to be looking at inside the gold market. What moves the metal price, number one, what moves the ETFs, how the yen and the dollar can move gold, and then what gold and silver equities have the best chance to getting to higher price in this current environment. So if you'd like to come to that workshop, come over to our website at TFNN, subscribe, whether it's a month, 6 months, a year. Be a nice workshop, great workshop. Gold's on the run, folks. Check it out. Come right back.
Hi, folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow finished down 89. We had the Nasdaq off 66. S&P's off 19.5. 19.5. Man, that was a quick move by the S&P. So we'll see what else is out here after the close. Adobe, ADBE. So let's take a look at Adobe. Adobe just come out with numbers because we are right in the numbers, folks, in a big way. They're just kicking off. They kicked off. Banks kicked us off on Friday. Each day for quite 2 to 3 weeks. We're going to have some big numbers out here. Adobe. So the low of the year in Adobe is 148. The high is 277. You're trading at 238. We closed at 238. This is trading up $10, which it gave up $10 today. It's trading at 247 right now. Let's see what Adobe has to say. So they see a 20% revenue growth for fiscal 19. Their earnings per share. Whoops. Okay, so let's see what they have here. Nope, not that one. It's got one liner so far. So their fourth quarter revenue consensus was 189. They came in at 187. That's interesting. They came in a little low, but bottom line is that market's basically digging this, whatever it is. So let's go take a look at, so you're still up, yeah, you're up $10 at 248. This is down off a high of 277. Bring this back. Okay, so what you do have is this, is that when we put this up, this is going to, you have a high volume low, but it didn't break. Oh, this is pretty wild. 235. No, we did break a small swing point. Okay, we broke a small swing point. Yeah, you know, this was up at 248 today. We'll see if it can basically get more juice going than that. What that did do, there's something else that's also out here that I just don't have my head. I just don't have the numbers yet, because what you do have is this, is as I just said about the S&P, you can see that if we look at the Qs, they closed at 172.21. That's trading down another 30 cents. So there's something else that's out here that that did come out inside the NDX 100. We just don't have just yet. Sears is all she wrote. Bottom line, SHLD. This is pretty amazing, actually. You know, that's been a slow bleed. This has been a slow bleed. Yes. Over the course of so many years, it's hard to believe that it even trades at 31 cents. So we bring Sears back. Wow, this is pretty amazing. So Sears was a $125 stock in 2007. $125 stock down to the price point of 28 cents today, 30 cents. What we will see, I suspect, is this, is that they're talking about the malls. So let's go to SPG. If we take a look at Simon Malls, Simon, you know, of course, has some Sears in their malls. But when I was reading the story, actually the ones they have, they got them. Maybe I get this quick, because the average price that Sears is paying right now is approximately $5 a foot in some of those malls, and that's because, of course, it was a large store, had the leases for a long period of time. And what is happening is that there was a story a little bit earlier, and what that was about is that the mall operators right now, if they can move this thing quick enough, they will end up taking that space and turning that space at either 3 to 4x of that $5. So for either $15 to $20 a foot. And the real question is going to be, I'm sure they're going to want to move fast and furious, because what they do have is that they have approximately 60 days inside the aspect to do the Christmas season. Walmart, we take a look at Walmart. Walmart's trading at $93.82. Now, what's going to be interesting about Walmart is that Walmart looks to me that they're let's see what they have to say. Walmart is looking to create an online store that would sell other companies' video services, according to people familiar with the talks, opening a new front in a fight with Amazon. They're going to need more than that for a fight with Amazon. The world's largest retailer has approached several media companies about reselling their streaming services. According to people asked not to be identified. The idea would be let customers of Walmart video service pay for additional services like HBO Now, Showtime, and Stars. The discussions are just beginning. The retail giant is trying to convert its hundreds of millions of customers into users of online services, responding to changes in how those customers watch TV. DVD sales have declined for more than a decade as customers trade disc for the streaming services such as Netflix, Hulu, and Amazon Prime. If we do go over to Netflix, NFLX, Netflix will be coming, I believe it's tomorrow. Yeah, tomorrow at 4:05, Netflix will be coming out with their numbers. So that's going to be a big number, because they are looking for monster numbers out here. Netflix, folks, is looking to take in $4 billion. $4 billion. You know, the thing that's amazing is that when you look at Netflix, bottom line, 4 years ago, they took in $5.5 billion. And if you remember, when they were buying all this content, there was plenty of folks that saying, hey, listen, man, you're buying all this content. There's no way it's going to go. Well, you can see when you start doing cash flow from $5 billion to $15 billion in 4 years, next year they plan on doing an additional almost 4. They plan on going from 15.8 to 19.7. These numbers that they're growing, folks, are pretty amazing. You know, domestically they're growing by 16.5% a year. Internationally, they're growing by 57% a year. Monster numbers. Their streaming business in general is growing by 33.3% per year. So, and when you can see the numbers that they're putting to the bottom line, excuse me, the numbers to the bottom line, that is a monster move too, because 2008 they expect $2.67. Next year that number jumps up to $4.27. So you're talking about no doubt monster numbers, big growth, and the real question is going to be what is everyone going to be paying for that growth? That's what it comes down to. Bottom line, that's what it was. So this is going to be wild watching this thing. So Trump just come out, folks, and was tweeting that bottom line that Sears Holdings has been mismanaged for years before it declared bankruptcy. Bottom line is that what I suspect he didn't realize is that our Treasury Secretary, Steve Mnuchin, was on the board the whole time, 2005 to 2016. So it's going to be interesting seeing where this thing is shaking out. Sears has been dying for many years, Trump told reporters as he departed the White House a few minutes ago. Damn it, it's been obviously improperly run for many years, and it's a shame. There you go. It's a small world. Dow Industrials closed down 89, NASDAQ off 66, S&P's off 19.5. Come right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No
matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the path of least resistance under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow finished down 89. NASDAQ was off 66. S&P's down 19.5. Tomorrow morning, thanks, Dave, for putting this up. We're going to have Goldman Sachs out at 7:30 in the morning. United Health, that's early bird, 6 o'clock. BlackRock is going to be coming out at 6:25. Johnson & Johnson at 6:40. Morgan Stanley at 7 o'clock. And Domino's Pizza at 7:30. Let's go over to Domino's Pizza, DPZ. This baby has been on a run, man. Holy cow. So the low for the year is 166. The high is 305. You're down $4 today, 272. We pull this back. Yeah, another high-end consolidation. So this is backing against its strength. Yeah, it looks like it can basically get into this 253. But that looks to me like it's just a consolidation. We take a look at revenue-wise, what they're looking at. This is pretty amazing. Pizza, $3.5 billion for the year. That's what they're looking to do. That's pretty amazing. They did $2 billion in 2014. They are growing by almost 12% in the United States. They're growing by 11% internationally. And they brought some money to the bottom line. They're bringing $8.33 per share into the bottom line. So you're talking about some big numbers. If we take a look at Goldman and see how Goldman's setting up out here, Goldman's in trouble, man. This is intriguing. So we pull this back, and what you're going to see with Goldman, Goldman's making its way back inside its lower range. Once it got back inside 218, which it did last week, that's the lower range. Now, there's monster strength from 174 up into this 220 area. Bottom line, they're $5 inside it. That says you can get into lower price. Let's go to our man, Al in Tampa. What's going on, brother?
Not much, Tom. How you been?
I've been doing good, man. Good to hear from you.
Yeah.
So what are we looking at today?
Isn't it funny what AMD did?
Yep, I watched it. Crazy.
I mean, it was like, I loved it. I got out at 32.53.
Good for you, man. Congratulations. AMD, folks, he actually called. I think he either called the day before it or he called it right on the 13th when it was hitting that high. Yeah.
The day before.
Day before, exactly. It was finishing up an ABC structure on the way up, folks, and that was the number. Yeah, cool. It's a good move, man. Congratulations.
Yeah. I'm wondering, I went ahead and got into some I got into a few stocks. I got into Intel, Apple, Facebook, and I'm not sure the other one.
Oh, that's interesting.
Microsoft.
Okay. So you're going in when the market's going south. They're coming out with numbers. If we start with Intel, that looks like it's going to test this high volume low again. It hasn't got there yet. So that's $42.04. Not the end of the world. We got down to $43.73 last week. So I think that one should be all right. Facebook, you get problems with, man. Facebook, 149 is like all over this thing. It hit it, and then it hit it on Thursday, and there's still too much juice down here. So, that you get.
One nice thing is, I got out of a stock that I had a lot of shares into one that doesn't have many shares. So, when Facebook goes down $3, I only got 50 shares.
Yeah, no, I'm with you.
Really
that's cool. Yeah.
I'm not really losing a lot of money by getting it, or Apple, in a position. I kind of like this a little bit. I made the money on AMD, and then I just put it into
good for you
stocks. If it goes down a little bit, that well, these were my retirements.
No, you spread it out. No, I understand. You spread it out. I can tell that was what was so cool about that, Al, too. I can tell that it was the money you just got from AMD because you didn't remember the last one. But in your own aspect, you knew it was good, which is pretty cool. I've done the same thing, so I know what you're saying. So let's go take a look at Microsoft. Microsoft's coming out with the numbers on the 24th. You know, I think what we have here, Al, we're going to be in this like a high-end consolidation. I mean, Microsoft's want to test that low of 104 again. You know, so what was the other one? I pulled up Facebook, Intel,
Facebook,
Microsoft,
Apple.
Apple. Okay.
Apple.
So Apple out here, you're at 217. Yeah, that's going to test that low too, 212. All these, you know, the way we came down last week, I mean, these lows are going to get tested, but at the same point, you know, 219 to 208 is not the end of the world in Apple also. And, of course, you come into shopping season, and I expect, you know, if any equity is going to do good in shopping season, it's going to be Apple, you know. And we'll find out whether they can bring it to the bottom line. But, you know, I don't think you're going to have a monster problem when those numbers start coming out. Market-wise, though, market-wise, you got to watch out that the S&P looks to me like it's doing a much larger ABC structure on the way down. And if that's what you get, they're going to throw out the babies, and whether they're good babies, bad babies, all of the above. And
I remember you always saying that we can't really go higher unless the bank stocks go high. Is that still true? That used to be your rule.
No. That's real, man. The bottom line is that when the banks, where I'm going, that we're definitely going down to this February 9th swing low, is that the bank stocks have already broken it. If people are selling off bank stocks and they're making billions of dollars, and bonds are going up, which they have, and the price spread is going up, that means they're going to make more money. That means that it's a problem in the marketplace, you know, because if we take a look at J.P. Morgan, so watch. J.P. Morgan, you know, they come out with the numbers, folks. Numbers were good. They took in $27 billion in a quarter, $110 billion for the year, you know, and they sold them down. And so that's saying that there's something else that's out there. The way that the bank stocks are trading is saying that the market still wants lower price, that bonds want higher price, lower yield. Because if the bank stocks want lower price, that is saying that the spread inside the 2-year note, the 5-year bill, the 30-year bond, okay, are going to get depressed, and the banks aren't going to make as much money on the spread. And if we had an environment that the interest rates were continually going higher, those spreads open up, and that's when banks really make money hand over fist. So we'll see where it shakes out.
What about SunTrust?
SunTrust. Let's take a look at SunTrust. SunTrust, and I bank with SunTrust, folks, and they probably should make a fortune because they never have enough help. That's the bottom line.
Yeah. I agree with you on that.
Yes, stay right there. When we come back, folks, when we're talking about SunTrust. The low for SunTrust of the year is 56, the high 75. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Talking to our man Al from Tampa. We're talking the banks, and right now we're talking the SunTrust. So when we take a look at SunTrust, the low for the year in SunTrust, folks, is 56. The high 75. Now they come out with their numbers on the 19th before the market. This has been a one-way trip down, man. You know, this $74 to 61. I wouldn't be touching this one at all. Do you own this, Al? You're looking to buy it? What are we doing here?
No, it's on my watch list.
Yeah.
This one is support and, go sideways a little bit. I'm wondering, one reason the market's going down is the Chinese are selling their stocks to raise cash. Could that be happening?
Well, I would say it's a lot more than the Chinese, I mean, what happens here is that I get your point. If we watch this, folks, I'm going to bring up the Asian market for you right now. And when you bring this market up, there's been some heavy destruction. If we take a look at the Shanghai, you're going to see we're 2568. This baby in 5 months is down from 3,200. And if we take a longer look at this, it's broken its swing. It looks like it's going after its lows of 1946. I think it's an aspect of you had the first few days of selling, Al. I suspect there was someone stepping out of the marketplace, meaning a big fund, then a couple of them, and they had to make a choice. So picture when everything is rosy, which it is, and you have, right now we have, I believe, 63 trading days left at the end of the year. So picture that if we're all money managers, you're up for the year, you see that the TAFs folks have kicked in, and they're going to start hitting everything. A TAF is a tax. That's the bottom line. They can spin it whatever way you want. A TAF is a tax. It's more money. So if you're buying it and producing it and manufacturing it, it's more money. Bottom line, I suspect that a couple funds start selling, more funds start selling, and then you get the aspect of the chicken and the egg inside the marketplace in general. Because what ends up happening, folks, there are so many ETFs now that when you sell a stock, they got to sell the ETF. When the ETF gets sold, they got to sell the stock. That's why you see these fast moves or faster moves in the marketplace on the way down. And I think just there was a lot of selling now, and bottom line is that it was about time for a real correction. And the first money managers that get out are going to be the ones at the end of the year that say, hey, listen, I'm up for the year. And I think it was a race to the ground here. So I think we get more volatility right up until the end of the year, though.
Yeah, it's kind of funny that Trump gave us the tax breaks and stuff like that and gave the companies, and now the company's going to have to start using some of that money, savings to support their companies.
Well, you can see, I mean, we're almost at the end of the year now. I mean, you know, I would say that, yeah, the market definitely reacted to the tax breaks. I mean, there's not too many stocks that are not up big. The problem with being up big without building a foundation is that you can go down big. You know, if we just look at Amazon, right? Amazon in March of 2018 was $13.65. March of this year. Then it went to 2050. If we want to go back to the beginning of the year, you want to see a run, folks. This is it. So Amazon started out at $1,170. It goes up $900, $890 and $80 to be exact. That's a monster move, man. That's an 80% move, right? You know, 75% move. So it's normal that you get a pullback off those.
Thank you very much, Tom, for everything, and
have a great one, Al.
the knowledge in that. So I'll just look around and see what I can pick off.
Yeah, see what you can pick off. Bring your wife for another vacation. It's a beautiful thing.
It is. I'll tell you, Europe is great. You really don't appreciate the United States until you go over there and see how when they talk about Troy or Rome or these places, you can see how small they are. And then you get into the food. The refrigerators are so small there. All the food is so fresh and so good.
That's awesome. But, you know, it's amazing. If you ever, you know, if we could teach everyone history by getting them in those places, it would be phenomenal. Because the first time that I ever went to Europe, and then the Colosseum, and I know what those places you're talking about. When you actually see them, folks, right, you want to be a history buff and a geography buff beyond belief, because what's hard to comprehend is that they're still there. And then when you start looking at it generationally, it's not that long ago, depending what your age is, that was there. It's like, wow, how does this work, man? You know, it's like, holy cow. The gladiators.
Yeah, and then then you look at the forts that were under siege.
Sure.
And they're real small.
Oh,
and then
listen.
You look at the Mediterranean and all the different places and the houses on the front. I saw Pompeii with Mount Vesuvius.
Isn't that crazy?
And I'm just saying, yeah, it's like there's this big mountain.
Where he's talking about, folks.
And then you see where this place got completely covered.
So,
and,
where Al's talking about, right? Pompeii, now this place got covered in all of about 6 hours, right? Everyone was sleeping. And when you're walking in here, folks, this is what's amazing. When you're walking in here, I'm sure you saw the guy. They have a guy at the very beginning, and it's like crazy, man, because he still looks there. You can see his teeth, right? And I mean, and he's fried, and he's been fried for, you know, hundreds of years. That was an amazing sight. There's no doubt, man. It's like, you got to be kidding me, man. And how they've basically dug it out, right?
Then you take the bullet train. I took the bullet train from Naples to Rome.
Yeah.
And
okay.
It's beautiful, but there's not a lot of people on the bullet train. You can see how expensive it is to run. I love the service and everything else, but how do they pay for it?
I don't know.
I don't either.
You must have basically gave him some of your AMD money, man.
No,
Cooking, brother.
I gave him the LL money.
LL, perfect. Look, yeah, lumber liquidators.
Lumber liquidators.
Okay, brother. Have a great one, man. Have a safe one. You gotta love that. And you know, there's no doubt. You know what's amazing, folks? I think when you look at history, what blows my mind is that when you watch these revolutionary films, reenactments, and they just like come at each other in a line. It's like, really? That's how you're gonna fight? It's like, and you can figure out, think about just that in general, then someone figured out, why are you gonna just commit someone in a line? You know, like go around them, surround them, do all the best. And I suspect at one point they figured that was cheating. That's how, you know, like, yeah, you want to kill each other, but there has to be a certain way of doing it. Yeah, not in that camp. Stay right here, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Path's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And folks, coming this Thursday, I'm going to be doing a workshop on gold for my subscribers. You can be a subscriber to the Gold Report right now. Very easy to do. The way you do that, you come over to TFNN. you'll see under featured content, the gold report. You hit the gold report there. You can subscribe for a month, 6 months, or a year. All of those subscriptions, folks, come with a 30-day money-back guarantee. What I'm going to be doing Thursday night, I'm going to be going from 5 to 6 o'clock at night. I'm going to be talking about, number one, we're going to bring the gold market from 2001 to where we are right now. So you can see where we are, where it's been, and where I think it's going, number one. Then I'm going to be talking about inside the market, what moves the metals market, what moves the ETF structures, and how the yen and the dollar basically relate to the gold market. Then we're going to go through gold and silver equities that I feel has the best shot at getting to higher prices in the current environment we're in. And we talk about the current environment we're in. We're going to have Asia opening up in about, let's see, 3.5 hours. Bottom line is that I expect what you're going to see first. The Nikkei is at 423, down 423. That'll open a little bit lower tonight, but I expect what we're also going to see is we're going to see a rejection of lower price out here. The yen is on the way of getting stronger. You know, the yen come off the highs. The yen that we're talking about here, that was trading 114 last week. You're at 111. This is in the lower range now. So 109 is game. You get into the 109, then we're starting to talk 107. And if you happen to be in the metals market, that is going to be a cool deal because the stronger that the yen gets, the correlation is pretty direct inside the gold market. Gold just loves a stronger yen. Gold goes topside pretty quickly. Oil, bottom line is that oil actually looks like it's an ABC structure on the way down, regardless of the problems in Saudi Arabia. And there's problems there, folks. Saudi Arabia is going to end up throwing their own folks under the bus after they probably order them to kill that poor columnist. Bottom line is that they're claiming that it was a botched interrogation. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. We look forward to speaking right back here tomorrow morning, 8:30. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.